Folks. Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 210, Nasdaq's up 262. Big number on the Nasdaq out here, folks. S&P's up 48. Gold contract up $7.80, trading at $19.16 an ounce. You get silver up 13 cents, $27.17 an ounce. Light sweet crude flat, $50.67 a barrel. Notes and bonds. The 10-year note down 10 ticks, 136.29. The 30-year off 25 ticks at 168.30. And King Dollar's up 378 ticks, trading 89.909. Euros at 122. Yen is out here at 103.85, and the British pound's at 135 to 1 U.S. dollar. Tom O'Brien, what's going on?
Boy, everything's going on, man. We got 31,000 Dow. We got Elon Musk making $5 or $6 billion a day with his Tesla shares. And we get yields at 1.07%, man.
Totally, and I believe, let's just go look at Amazon for a second, because Elon Musk only needed $3 billion. Jeff Bezos is up 66 today, okay? He only needed
that close?
Yeah, $3 billion. It was $3 billion this morning.
I had not heard that.
Yeah,
He's got 180 million shares, so it's simple math. $1.8 billion for every $10. And what's Tesla up today? $30, $35, $35. So simple math, more than $6 billion. Boom.
Amazing. Let's get over to our man, Mr. Kevin Hinks, TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, if you want to understand the option market, option strategies, futures, outstanding program, 11 to 12 Eastern Standard Time. If you haven't test-driven yet the Thinkorswim platform, you're sitting on the site, hit the banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, guys, this is going to get kind of interesting here because, you know, some of the headline movement the last day or so has been in bonds, right? And bonds and the 10-year yield. Well, there's no more important day to trade bonds than on unemployment and non-farm payroll Friday. So tomorrow morning, we're going to get a pretty significant number to start the year, a number that, you know, based on the ADP report on Wednesday, the expectations are starting to ratchet lower for non-farm payrolls. So tomorrow could be a real interesting number. I was really surprised, Tom, I don't know about you, that how easily we went through 1% on the 10-year. It makes me think maybe there's more action to come around 1%. It shouldn't be that easy to fly through 1% like it did, but a big number tomorrow. I mean, one thing we know about non-farm payrolls and unemployment, bonds will move one way or another.
No doubt. Well, you know what's so intriguing, and that I totally agree with you, Kevin, and what's so intriguing is that what had happened on November 11th, though, we had a spike low in those futures, and we haven't hit the spike low in those futures yet, for the 10-year. So even when I was listening to all the analysis last night, in the middle of the night, saying, oh, this is the end, the bonds are going up, I'm saying to myself, hey, man, you haven't even tested the low yet. Then now the 30-year went. But the 10-year hasn't yet. I mean, it's approaching it. It missed it by 2 points today, 2 ticks. So it's like, okay, let me. I want to see what you're going to do when you're down there, man. I mean,
yeah, we are. One bad non-farm payroll number, and bonds could easily retrace some of it. So I'm just, this is going to be a big number tomorrow, because the question is it going to be negative? Are we going to get a negative payroll number in January of a year? So I don't know. Expectations were $100,000 at the beginning of the year. Now they're between $50,000 and $65,000, depend who you listen to. So tomorrow's number is going to be pretty important. It wouldn't surprise me if today's trading in this market consolidated the second half of the day, because that's a pretty big number looming on the horizon.
Oh, there's no doubt. And, of course, we're in the most wonderful time of the year, as you would say.
Yes, we are.
And, I know you guys you were putting on, it was a calendar spread. You were putting on Constellation Brands yesterday, right?
Yes.
Yeah.
Yes.
And, when you were putting it on, I was loving it because, what's amazing, and most of the folks that listen to us know, Constellation folks, owns the over, I think 48 to 52% of cannabis. And it's so cool, Kevin, when you were putting that on, I'm saying to myself, just how much canopy growth was up, that was putting $500 million into Constellation's brands. Never mind, the bottom line is that it's a great company anyway. Do you know what I mean? So
right. People think of Constellation Brands. They don't really know. Some investors don't know what that means. It's Corona.
Yes.
It's Modelo. It's Pacifico. It's Ruffino wine. It's a big, huge portfolio of liquor.
Yeah.
So, plus, you're right. They've got an investment in, cannabis that is paying off.
Yeah.
They call it a hedge, call it whatever you want, but they're investing well, actually, and it's showing up in the price of their stock today.
Yeah, and what's so intriguing about it, folks, is that what happens is that they have to do a mark to market. So, like, when Canopy was going down, what makes a difference? Well, guess what? They have 141 million shares, and the bottom line is that for every dollar that's going up, that's a mark to market. Like, as we're traders, it's pretty cool, man. Great. It was a nice setup, man. I like that setup. Totally, man.
Big day tomorrow. Big day tomorrow for non-farm payrolls and unemployment. Biggest data point of the month, guys.
You gotta love it. Right here, folks. 45 minutes from now. Check it out. Kevin, you have a great day, safe day. Oh my God, it's Thursday already. Look forward to speaking to next Tuesday, man.
Thanks for having me on, guys.
Thank you.
Thanks,
Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi, folks. This is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245, and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading up 272. Nasdaq's up 260. S&Ps are up 52. And this market, folks, Tom, we're right back to where we were before the charge on the Capitol, man.
It depends which one you're looking at, right? I mean,
I was looking at the Nasdaq, but yeah.
The S&P. It's just remarkable that we're well above that level in the S&P. We're 20 points above that level in the S&P. But I know Nasdaq critical level. I talked about it on my show even, and very interesting as we come up to the highs we had on Monday. I mean, you're less than 100 points in the Nasdaq 100 right now from the high we had. What happened to the trade of yesterday, saying tech stocks were in trouble? Right? Democrats were going to come down a little bit harsher on antitrust. That was the one thing trading lower. And guess what, man? We're right back to almost Monday's highs before we sold off Monday, before we sold off on Wednesday. Yeah. Just remarkable resilience, man, across the board.
And, in the afternoon show, I mean, particularly, folks, okay, because Pitcher, I've been embarrassed that this is at a high. But if you listen to yesterday's show, there's so many ABC structures on the way up. It's like, man, we're going. We were just talking about Constellation, and this is a monster ABC up, man. You and I talked about this yesterday morning on the air.
Yeah.
It broke the B point yesterday with volume, man. I mean, this thing's going. The banks, let's go. The banks are in ABC structures up. I mean, it was kind of wild. Look at J.P. Morgan and gapped again. Oh, my God. J.P. Morgan's up $5. So these are traded like tech stocks now. So
all the banks are up 10% or more in like 48 hours, which is an astounding statistic when you talk about banks. But the world has changed a lot in 48 hours, especially for banks and yields.
There's no doubt. There's no doubt. Now, let me show you this, folks, okay? When I was just talking to Kevin, and we were talking about the aspect of the 10-year. This is you want to pay attention to this because, we're at 1.07%. But the test is down here at 136.26. We've hit 136.28. We'll see where it flies.
And what day is that you have there?
November 11th.
Okay.
11th, yeah. November 11th.
You know, it's interesting how, I don't know how Thinkorswim correlates kind of the continuous action of putting a 10-year up here, which is usually what I'm pulling up, but we're actually well below that level when you look at where we were on my chart.
Yes, no, that's the same thing. If I put the continuous up, there's no doubt. That's what ends up happening. I'll put it up right now, and I was looking.
And I know that varies because even yesterday, right, you had yields at highs since April, but we weren't actually at lows on this chart. So that would further what you're saying, you know, in terms of that. Because I had to look into it yesterday. I say, wait a second, how are yields higher than they've been when we were coming down? Actually, we weren't even below. I mean, on my chart right here, on June, I have a flash low down to below where we were at right now as well.
Right. And these, so like I have 137.08 on the continuous. You know, what happens is this, is that they string these together, folks, okay? So they're a good indication of where it's traded. Let's put it that way.
Sure.
When you are still trading the same contract, I still use what that contract was.
Sure.
That's what it comes into.
Yeah.
Now, those contracts, this is what happened prior to this. The last two option expirations, when the rollovers happened inside the bond market, those are the two spikes. Now, both of those, they spiked it, then they said, okay, I don't want to stay here. So, you know, we'll see where it's going to shake out. But it's intriguing, you know, because technically that's how it's set up. Fundamentally, the Fed's saying, okay, they can control. Well, they can control as much as they are trying to control the short end of the curve. The long end of the curve they can't control because the long end is a whole different ballgame. The short end, though, guess what? That's the 10-year, you know, and the 2 and the 5. They have a lot more control over that because they get the buying power. So we'll see where it shakes out. But let's go over to the dollar. So the dollar rejected lower price out here yesterday. Yeah, it looks like it's going to bounce, man. We'll see. You know, yesterday it looked like it was going to bounce too, and it didn't get anywhere, man. You know, the gold contract got smoked yesterday. That's up $6.50 today. But even when that got smoked, the equities weren't down. You know, they were down. They were down pennies. You know, it's pretty wild actually when you look at the GDX. The GDX. Look at that thing yesterday, man. I mean, gold was down $45 at one point. And the GDX only made it to 37.47, and it closed a point higher. So,
I mean, so I got to jump back to Tesla just because it's tantalizing, man. We'll jump back. But I was looking at it in the break because I couldn't believe it. So the two biggest trackers out there, I'm just going to pull them up, are the Bloomberg tracker for wealth and then the Forbes tracker for wealth. You know, in terms of wealthiest individuals, at least that's Forbes is always maybe the big one, but Bloomberg's got their billionaires index. And they're a little bit off, which is interesting, by the tune of, looks like Forbes has it about 15 billion and Bloomberg's the one that's got them at about 3 billion.
Okay.
The thing that struck me most is that you look at Tesla's chart, we're trading at about 800 today. We were trading at about 400 on November 16th. Okay, so that has doubled in that time, right? Now, I know Elon has more than just his Tesla shares, but they are a majority, if you know, to put it lightly, of his wealth, which means that he's made approximately half his wealth in that time. Now, I'm ballparking everything. He's got SpaceX in there too, right? I know, but let's just generalities. So he's made about $90 billion in the last 45 days or so, which would make him the 5th or 6th richest man in the world just in that period of time. That I don't think that usually somebody comes from, you know, in 45 days they double their wealth to become the richest person in the world. That's never happened. Things might be getting a little bit exuberant here, and it might be fitting if he eclipses that number, and maybe that's the sell-off. Because you look at anybody else in our time, folks, you know, it's that type of rapid growth with that type of expansion. It's never happened. Doesn't mean it can't. But usually you don't add $100 billion in your equity off $100 billion.
Exactly.
It's just we all know. Anyway, it's just interesting.
I would still rather be, if we're talking about who's going to be the most consistent wealthy, I'd still rather be Bezos. You know, I think it's spread out more. Do you know what I'm saying? And it's not the acceleration's not so fast. Yeah.
It's, you know, would you rather be a shareholder of Amazon that's right in the middle of a consolidation for the last 6 or 7 months, right? Or would you rather be a holder of Tesla today that's going in the last 6 months, backing it up, tripled in that time?
No doubt.
Yeah.
Let's take a look at some of the higher volume equities out here today. So You get Fuel Cell Energy, that's up $1.53. Plug Power is up $9. There's your share. I mean,
my nemesis. Yeah. For those that don't know, when I was playing around with Robinhood just to see what it was like, they give you one free share of a company. It's a cool marketing promotional. Yeah. I mean, geez, how many mentions are they getting on TFNN off that one plug share they gave me that was trading at? Let's pull up the chart to remind myself and listeners. You're talking about $2 to $4 somewhere in the beginning of this year when I just wanted to see what and I don't know what this company is. You know, I'll take my $2. Thanks for the free gift.
Sure.
Man, these companies, all of them, Fuel Cell, Plug. I mean, you're up 26% today after being at $10 and change in November.
Yeah, big numbers.
Crazy.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials now trading up. Where is she? Come on, baby. 286. NASDAQ is the catch-up out here today, up 269. S&P's up 54. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 289. You get the NASDAQ up 267. S&Ps are up 54. Bottom line is that you get some action out here. And let's just see how we're pushing into these numbers. Okay, so we have the SPYs at 18 million. That's a good number. It's not a bad number. We take a look at the Qs. Qs are 10. That's not. It's not that bad. We'll see what ends up happening. Last time we came down, you made a high there of on Monday, then we came off it with 45 million. So inside the NDX out here today, we have the strength is Walgreens Boots. That's up 7%. NetEase is up 6.5%. DocuSign's up 5%. Tesla up 4.5%. Taken away from it is Trip.com down 2.7%. JD and Fox. So,
was that Trip.com? T-com? Yeah?
Yeah. Sure. That's a Chinese stock. It's
I don't know. Okay, that's Trip.com?
Yeah. I believe me, I do the same thing thinking it's T-Mobile or Sprint, right? Yeah. It's
Trip.com group. Nice. Okay.
Yeah, it's a Chinese travel agency.
What I had figured out, those telcos actually were trading lower again on that news. I'm not sure if you saw the NYSE. It's just that they weren't open yet in China when we were looking at them yesterday. So when the NYSE did decide to delist them yesterday, they traded down 5% again on that news.
I get it. Okay.
Yeah.
Okay. So, what do you think about last night?
Hey, how about Uber? Let's jump around to some equities. I love me some Uber, man. They're charging higher. Looks like yesterday you got the Labor Department finalizing some rules that had to do with basically classifying their workers more like contractors, which they won in California.
Okay.
So that might be putting a little bit of a boost further today on Uber. I mean, we're coming up to all-time highs within about 30 cents of this equity. We were just trading at $50 4 trading days ago, and we're at 55, 60, up like 10%. Strong stock. I think Wedbush came out and said that they're going to return to basically normal activity through 2021, and then 2022. It should be like back to normal almost, which, I mean, just for humanity, I hope so and I think so. But it's pretty staggering when you talk about some of these companies, how 1 year is going to be from hell to heaven in terms of the turnaround. When you're talking about ride sharing, travel, parties, drinking, right, out at the bars. I mean, how many people we all know? It's just remarkable. So I think you're seeing part of that already.
And, Uber very well might be another ABC up. Now, would you more than likely, what you'd like to see today, 6 is a 36, what you'd like to see is that this closes like kind of right here. Because what happens, folks, the B point is $56.02. You're going to get an acceleration of volume, but you need so much volume on this B point compared to how it trades. You need 46.7 million. And what I've seen is that if you can push into a high, folks, and you basically lay right below it, but you have an expansion of volume, that's when normally you just break that thing and blow it away. And if it is, it's going to be a big one, man. Let's just see this for a second. Oh, it's a big one. Holy cow. Okay, so you got the most, it's hard to, even the conservative way to do it would be, it's $5, I think. No, it's 56. If I start down at you're talking $19. Yeah, so you got, 48, 58, 64, 60, 67. So there's a lot of ABCs out here, man. That's the bottom line. And we'll see how these babies finish out,
It's just remarkable across the board, man. It really is. I mean, we're seeing the S&P is just it's a constant slide upwards, man, across the board. I got the Dow up 315 in the futures market now.
Yep.
And the NQ's inching ever closer kind of to those highs we had on Monday.
Right. Let's get over to the TLT. This is we're going to target wants to look at the TLT. You had a gap down yesterday on the TLT. It did reject lower price at that particular point. It didn't reject lower price for the day. It did. You're down again today. We're down. We're at 169. The TLT, folks, is the 20-year plus bonds. So what happens is that the ETF structure itself, meaning that they're actually trading 30-year bonds, but there needs to be 20 plus years left in the bonds. That's how that works. We'll see. I mean, we're at 151. The breakout area was 139. So you got a high out here of 148. Like they could go to 148, man. There's a little structure there at 148 that might, basically save them. But, that particular point, that's where it looks like it's going, man. Look at those NQs.
And it's just it's a remarkable day, man. In terms of, and we had a question in the den saying, because there's winners and losers. Mario, Disney's down 0.4% today. I don't know. That's market gyration. That's what I would say. I mean, you put it on a daily, man. This thing's been a rocket ship. We're basically just sitting at all-time high. So not everything can just, there's some stocks have gotten ahead of the market trading higher. Some stocks are lagging the market trading higher. Anytime it's kind of the Tesla deal. It's like, if the market keeps going up, can Tesla just go up forever? I don't know, because it just went up tenfold in 2020.
Well, and you're so right. So what happens, folks, so when you're looking at the market, you got to kind of look at a couple different pictures, right? The biggest picture is what people are investing in and what funds are invested in, right? But you have to take into consideration what the computers are doing and what shorter-term traders are doing. So in the Disney case, right, you can see Disney held up as the market was gyrating, okay? So that was a very cool trade for big money managers and for big traders, right? It's steady. You can see this thing has been steady. Well, what you have, they're probably taking just some money off the shorter-term traders, because it's only 89 cents, and they're going into where they think there's going to be movement. So, right. It's just, some traders will have more sectors on their radar than other traders. But I can tell you, that's kind of how it works, because I'm sure if you're a trader out there, you do that yourself. Do you know what I mean? You trade the sector for a while, you do this, you're going to take some money, say, okay, man, I'll swap that off there. Something else has got hit 5 or 6 points. It's like, okay, man, let's go down here and let's see what we can do down here,
Totally. I mean, I sent out a video to subscribers I talked about saying, listen, we're going to hold it in the long term, but if you're thinking short term, take some money, man. You just went from 120 to 180. If you don't think that a pullback's possible when you go up 50% in 45 to 60 days, then you're crazy, because of course it's possible.
Right.
It doesn't mean long term. But all things considered, that's a pretty small gyration up near about 180
that's
after
nothing,
you were sitting at 120 for the better part of last year.
Yeah. I mean, that's zero. No doubt.
I mean, the 382 retracements on these stocks are staggering, as you may expect. And that's just going, let's do it real quick on Disney, because I always keep my eye on, man. You just go from where we were October 29th up to the highs, and you're looking at 158. How about $20 lower? And that would just be a 38% retracement of the move that we had in 2 months. You're not saying, because sometimes Fibonacci's get a little distorted when you could say, oh, well, a stock's been on a run for 15 years, right? And if you pull back 38%, okay, this is a 45-day move, a 60-day move. Of course you might get a retracement for, a 2-month move.
And I'm telling you, folks, it's crucial to stay with the percentage moves, because I've seen moves that are so big you couldn't believe that could actually happen, and it's what you're talking about. It might be a couple of years, but guess what? It's gonna retrace, man. Stay right there, folks. Tommy and I come right back. Hi, folks. This is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins, too. Call Indy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrial's up 310, Nasdaq's up 271, S&Ps are up 353. And, bottom line is it almost looks like the market's been marching forward anyway, but I suspect within another month we're going to get another stimulus bill. And in this particular case, more than likely the states are going to get some money to basically get needles in people's arms, which they need in a big way.
Thank God.
Yeah. So it's going to
get it done. It's not getting done quite yet, so they got to get it done. I said to you, one of the only silver linings of this slow rollout is that potentially you have a little bit of a buildup of supply that can get pushed out as long as we're able to get it out to the public. So hopefully they get that done. And
that's the thing, that the kick of what you just said, because you got to get it out because they do expire, right?
Exactly.
That's.
Yeah, it's the unfortunate part of the people first in line, whatever it is, right? They're not getting it out as quickly as possible. I think you're going to see, and it's a tough debate. There's not exactly a right or wrong in terms of how quickly you push it out to who you push it out, right? But I think you're going to start to see the conversation. You already are saying, listen, if you're not using it, right, then you don't get to use it. Like, then it's going to other people, man, because if you're a hospital and you can't, there's reports of some of the people even in, the healthcare industry that aren't taking it, the shots aren't getting used.
Right.
Well, then let's get it out, man. That's so I imagine that's going to be the shift that takes place over the next 4 to 6 to 8 weeks.
Yeah. Let's go take a look at Carvana for one of our tigers. In fact, I believe this tiger's in Sweden. It's Kenneth, man. It's a beautiful thing. This is an online platform for buying used cars. I mean, it's pretty amazing that we've gone from, in 20 years that people, saying, okay, if people are going to buy things online, and all of a sudden you're buying cars and selling cars online like nothing.
You mean they didn't know that vending machines were going to start selling cars in 2020?
Seriously, man. So totally. The low of the stock, folks, and we go in the last 12 months, okay, the low is $22. The high is $292. When you look at the revenue numbers on it, it's pretty impressive. I mean, when they started this thing, 2017, they made gross $858 million. Now they're at $5.4 billion. They're looking for $7.9 billion next year. They're growing by the tune of 115% over a 3-year period. On used sales, on wholesales, they're growing by 197%, man. It's a monster number.
I mean, it makes sense. It's a progression. At first, look at Bezos. He said, you know what we can sell online? Bezos said we can sell books because they're identical to everything else. You don't need to touch it. We're going to sell books because nobody cares because they know the title of going to a Barnes & Noble. They know the title. They're getting the same exact book if they buy it online. That was the easiest thing. It's a brilliant idea, right? And then he realized as the economy picked up online that, guess what? People are becoming more and more comfortable buying a car is going to be one of the last things, but we're basically there now. People are super comfortable, man, just like real estate, right? I mean, I think you might see it in real estate, man. The amount of middleman transactions in real estate that gets taken out of every transaction,
it's
better
huge.
than most. It's you know, and you're seeing the Zillows of the world solidify that, the access to information. A car is the next step, right there. But we're obviously there. There was that cool article, right, about the father-son that are running, that started Carvana.
Exactly.
And the multi-billions that they deserve, man, starting that company from nothing. And, talk about haters, man. Can you imagine the flack they got when they said, we're going to sell them online, we're just going to sell them? It almost looked like vending machines. That had to be quite a sale, walking into private equity, spinning that one, man.
Oh, there's no doubt.
Yeah.
I don't know if you're long or short this, Kenneth. To me, it's kind of risky up here, but that doesn't mean it's not going to go higher. There's just not enough juice up here. You get the breakout, it come back to the breakout, and it rejected, the lows for sure. There's just not much. You're moving $21, and you're not moving with much. So.
Hey, can we jump back to Uber, speaking in cars? So, great question in the den from our man Z, talking about, where can this thing go, man? Rightfully so. We just went from 13 up to 55 right now. We just went from $32 up to 55 in the last 2 months. And so this is part of the long-term equity portfolio we have in Rocket Equities and Options. And we got back in here at around, I think it was like $30, somewhere in there,
you got
32.
a good price. Yeah,
somewhere in this July, I think, area, this consolidation down here. Now, the logic goes like this, right? It's kind of similar to what I put out in Disney, as in, if you're a short-term investor, man, you got to think about taking some profits. Doesn't mean it can't plow higher, but we saw a huge consolidation in this area in the middle of the year. You charge higher. Maybe we see this consolidation up here. Long-term, though, right? What I look at is you had this equity earlier, we'll call pre-COVID, at $42, okay?
Yeah.
Now, they came out, because I remember, because this was already on my radar, in February of last year, so we're almost going back a whole year, which is remarkable, and they said that they're going to start making money, man, by I think it was this year now, as in 2021 or the end of 2020, they're going to start making money. Well, that whole plan changed, obviously, but the point being, they're very close to profitability for a company that's never been profitable, just as they grow their business. The real next step is, and this is years to come, but you're going to start seeing it, is when does the transition take place to some type of automated vehicles that drivers don't even play a role?
Right.
Doesn't mean it's going to happen even in the next 2 or 3 years, but I think it's going to happen in the next 3 to 5 years. I mean, you're going to start getting maybe even smaller vehicles for their food delivery business. You're already seeing this in small cities, right, where you're kind of like golf cart-esque more than a car.
Right.
The ramifications of that business as you start taking drivers actually out of things, which I think is coming quicker than we think.
Well,
so doesn't mean we're going to hold it for 5 years, but that shift is taking place right now. And Uber's going to be a huge player. Tesla might be too. Apple might be too. But they're going to be in there.
Well, and I believe you know this, Tom, that in St. Pete, folks, okay, so we're in the third block next to the water. The first block right now has a test drive going, and it's a driverless car. It's free. You just jump in it, right? Now it's only it's going like 3 miles. Meaning the route is 3 miles. But the bottom line, this car is going 12 hours a day, 3 miles. People get on it, get off it. I mean, it's amazing watching it.
I heard you talk about with Dave White actually back on one show. And what was cool, what Dave said as well, to add to what you're saying, is that it's so much easier when those automated cars might know an exact route, that they don't have to plan for an unplanned. You don't say drive across the country.
Right.
I'm not going to even tell you that you might encounter some 5-way stop sign with 3 cars. No, it knows a 3-mile route. It knows everything it's going to see. Right. It's done it 1,000,000 times in AI.
Yeah.
And that's safe. So that's the first step. And that's what you're already seeing it. Exactly. So that stuff's coming.
And you know what they do? You know what's so cool, folks, what they do? And this is what's amazing. In this particular one, all 4 wheels, it's a 4-wheel drive, and all 4 wheels can turn. So you see it go into a parking spot. You can't believe it, man. It goes right into a parking spot like nothing, right? It comes out of a parking spot that you and I are going to have a hard time getting out of. It's just it's a mind blower, man. I mean,
we're stuck in the last millennium, man, with only vehicles that two wheels move.
Totally. And now Uber also, folks, in Z, I mean, if this takes this B point out with volume, the bottom line is it's a 20-point A to B, which gets you $68.
I mean, we're not that much higher than where we were pre-COVID, and their business is going to explode with food delivery, and they'll be back to normal in a year.
Yeah.
So.
Stay right there, folks. Tommy and I come right back. We have the Dow up 335, Nasdaq's up 286, S&P's up 57.
Back in the day,
come right back.
I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There's no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 320. Get the Nasdaq up 286. S&Ps are up 57. And if we go over to the small caps for a second, be careful, folks. I wouldn't be basically shorting the small caps. The IWM is a monster ABC structure up. When I was doing this yesterday, it's like, you're going to be kidding me. You know what's amazing, Tom, is that the small caps took so long to take off, to get that, July 2018 high out. And then It's just a nonstop deal, man. I mean, This is like a monster. This is 201. If I do it conservatively, that's down at, oh my God, it's down at 165. 35 bucks gets you into 225.
The only thing I'll add, and I agree, because I just have this channel line up here on the Russell, and talk about a channel, right? But what's it do? Our man Bud Rolf's the channel master. It gets above it, It comes back down and tests it. And I had this line on here before that test. It's not like you draw it after the fact. It's always nice when you have these formations already drawn on your chart, right? Here's our high from June. Here's the high it was touching back in November. Climbs above there, touches that line, and kaboom, we're dramatically higher right off of that trend line. Pretty cool.
I'm telling you. I'm so happy, folks, that I believe in ABC structures because I would still be a bear. And, like Larry said this morning, he was saying, well, maybe we'll never turn. It's going to turn in 20 minutes when we say that. I
was listening. He said, whatever it is, right? It is what it is, man. This thing wants higher prices. If you don't think it wants higher prices right now, show me what you're looking at. I would love to see it. And, it's a hard case to make, man, with this market right now. My goodness.
Folks, stay right there. We got Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.